What is going on, everybody? We have a lot to talk about today. Right now we are looking at Bitcoin, and we are zoomed out on a very, very high time frame here. I think we need to really get to the basics or cover some of the basics of why Bitcoin is such an explosive asset and why it tends to have these boom and bust cycles. I think a lot of people have forgot really what is driving most of the price action for Bitcoin. Right now, if you look at this chart, you're obviously thinking, wow, well, that's a pretty bullish chart considering, back in 2020, the price was around $5 and now it's at $63,000, right? But if you look at this, zoomed in a little bit closer over the last few cycles, there's something I want you guys to notice, okay? Bitcoin has very long, what's called consolidation, accumulative phases, okay, where people are accumulating Bitcoin. And it also has long distributions. Okay, what does that mean? Accumulation is when people are accumulating Bitcoin slowly with the idea that they can sell it higher later. Okay, so right now it is October. Okay, this is where we are. I'm going to show you where we were last cycle in October. Okay, this is where we were last cycle in October. As you can see, there was an explosive parabolic rally after that. Okay, this is an election year. Happens to be that the breakout years for Bitcoin are during election years. If I go back further in time, okay, this is November right here. So you had this consolidation phase, much shorter than the cycle after that, okay, and then an explosive rally, okay. And you can actually even go back further and see that there's a similar trend here. Okay, so around August through November, there's a consolidation phase and then a blow up or a big move after that, right? Why does that happen? Is what you should be asking yourself right now. If you're interested at all in this price action as a trader and an investor, and I can tell you what it is. It's actually pretty simple: supply and demand. What ends up happening, okay, is after the halving. So the halving occurred. If you don't know what the halving is, the halving is when the amount of Bitcoin being created per day is cut in half. Okay, so before the halving of this year, there was roughly 1,800 Bitcoin being given to miners, which is increasing the available supply to be sold per month. Okay, 1,800. All right. Why is that important? Well, because this is they ultimately are the most consistent, largest sellers over time. Okay. This isn't always the case. Like, for example, earlier this year, a lot of this selling wasn't just miners. It definitely was miners, specifically when we got here earlier in the year. But you had the U.S. government selling, the German government selling, Mt. Gox repayments. So many different sources of selling is the reason why you weren't able to break higher. But miners are really the most obvious and kind of most consistent source of supply dumps on the market, or at least historically that this has been the case. All right. So what ends up happening though is you have a halving. So you had a halving right here. Okay. And then you usually have like 6 months of consolidation where the price isn't really going anywhere. Last cycle, it did trend higher, which is a little bit different than this cycle, but it's the same kind of phenomenon where it takes about 6 months for that supply shock. Again, you cut in half the amount of new Bitcoin being created. It creates a supply shock. So what does that mean? If you have an equation, it's very simple math. If the demand increases at all, you can only really go up at that point, assuming that the supply is the same. Well, it is the same, right? Like, we know what it is. It's 900 Bitcoin per month. So right now, what this is telling you is the supply and demand has roughly been equal. That's why you're going sideways. Why has it been equal? Because you've had a big supply overhang, like we just said, with miners selling, Mt. Gox repayments, the U.S. government and German government selling, right? And not to mention, you just had a bunch of FUD and all this stuff. People worried about recession and all these fears that cause a lot of these sell-offs. Well, what ends up happening during that is people that have played this game for a while understand this is the best time to buy post-halving, and that's what they've been doing. They're not likely to sell to you even anywhere close to where you are now. Why? Why would you buy a bunch just to sell it barely higher? So the people with what we call weak hands have been selling to strong hands for like 7 months. This is an incredible opportunity for higher prices when the demand starts to increase even just a little bit. Like I said, prices will stay sideways when demand equals supply, but as soon as that demand is greater than the available supply on the market, this is going to start to move higher. So this is what usually happens, is it kind of catches people off guard. You get into a bullish or a seasonally bullish period of time, which is typically October, into the new year. This is usually when Bitcoin performs the best. So you'll naturally have a little bit more demand, at minimum, during this period. But what ends up happening is that demand, that increased demand, creates more demand. Why? Because you start to get green candles, and people think, oh, maybe I should buy some of this, and then it keeps going up. Well, maybe I should buy more. It creates this psychological positive feedback loop where higher prices create more demand, but guess what? Your supply is pretty much going to stay the same until you get significantly higher, where larger market participants will want to sell to you. It wouldn't make any sense for them to sell to you at this point, given how much accumulation we've had here, how much consolidation, and really how undervalued Bitcoin really is compared to gold, which is really what it is. It is it's basically digital gold. And we can see that gold has been leading Bitcoin, okay? As you can see, gold went through its own huge consolidation phase, and it's finally broken out this year. This is what Bitcoin is likely to do over the next few months, okay? So one of the most bullish setups that I can remember, and I've been trading this for about 10 years now, this is easily one of the most bullish setups I've seen for Bitcoin. And if you look at some of the other factors that we're going to go into here, you'll see why it's the chart is great, but the fundamentals are what's really great here, okay? And I think we can start off by looking at some of the data and talk about what has happened. So last week we had a few data points that came out, and I think I went too far back here. Here we go. So we had non-farm payroll came out. That ended up being higher than expected. You had U.S. ISM services PMI. That was higher than expected. Why does this matter? Well, people were worried about recession, right? That was really the fear over the last few months was, the market does not want to see a recession, obviously. Why? Because future earnings for the stock market wouldn't be great. And you typically just don't want to be risk on going into a recession, right? Well, that has pretty much been, those talks are pretty much dead at this point. We're clearly not going into a recession when you're getting data like this. And there's been data coming in for weeks now that are showing, I've been saying this pretty loudly, that we are not going into a recession, at least in the short to medium term. It's pretty clear that, if anything, we're going to be going into a higher inflation environment, meaning you're likely to see inflation pick back up as we go into the new year. And that will likely be the new fears and what may cause the market problems later, okay? But given where Bitcoin is, I don't think it's going to care at all about that for a while, okay? Next week, or this week rather, sorry, we just don't have anything that's important in terms of data. At this point, CPI doesn't really matter as much, although I will say that it is about to start to matter more. Now that people aren't worried about recession, now they're just going to start to be worried about inflation. It's funny, we're going to go back and forth between these two pretty regularly, I think, over the next few years. But now, I still think we're in the place where the CPI doesn't matter quite as much. However, every print after this, I will say, it will start to matter. If this comes in hot, you're going to have problems. Obviously, I don't think it will. Look, we're not going to speculate too much on that, but I think, again, you're going to see this start to become warmer later, probably not now, especially if you start to see gasoline prices increase. So I think that this is not going to be that big of a deal this week in particular, and then PPI probably not that big of a deal unless it comes in very, very hot. So this week is not really, it doesn't have the formula really in place to really cause a market a whole lot of problems. What will cause the market problems, potentially, is this Israeli-Iran situation. Now, look, we're not geopolitical strategists. We're not going to try to act like, that we've spent, like countless hours looking at this. We have to look at this as practical as possible, try to understand it the best we can. And at this point, it definitely is what we call a tail risk, meaning if you look at all the probability distribution of things, that are related to risk, it certainly is. I mean, it's a lower probability, I think, for a major escalation, in my opinion, but it's there. And you have to be prepared for it and have a risk management strategy in place for it. But it's something that I'm not going to spend too much time focusing on. You just have to be prepared for it. They may be going back and forth for quite some time. Okay. But in terms of data that is coming out, things look pretty good. what the market has been reacting to today, at least Bitcoin, is likely this poly market, this update on poly market, which has Trump winning quite a pretty big lead here. This is I think the biggest lead Trump has had on poly market, if I'm not mistaken, or close to it. It looks like back in August, back in August it was about the same. No, I'm sorry, that was backwards. So no, this is the biggest lead actually, I think, for Donald Trump since she actually came out as the the official candidate running against Trump. So huge deal here. Why? Because obviously crypto wants to see Trump win. We're not going to get into the politics there, but clearly Trump is very much pro crypto, pro Bitcoin. He was at the Nashville Bitcoin conference, and the market's going to like that if he has a higher chance of winning. We're not going to spend too much time there, but what I do want to talk about is how this is going to be the last opportunity, in my opinion, for people to really get on this ship before it takes off. I really think that, we are positioned, we'll just say this, okay, like not financial advice, but I think this is not going to take much time to probably get closer to 100. I'm expecting this to be around 90K by the end of the year, and we'll see what happens after that. I don't think it goes, I don't think this goes up in a straight line. You probably have some sort of pullback, but this is likely to be pretty explosive to much higher prices given how long this has consolidated. And if you think that I'm just kind of pulling that out of thin air, I'm really not. If you look at the rally we had, okay, we'll just take it from October last time. I mean, we went up about 350%, okay, and well, even higher the cycle before that. So if you just take like a fraction of that, okay, so last time we did 350 from October. From all-time high, it was probably closer to like 300, but just to get to 90 is like 45%. To get up here is about 100%. It's not very, I mean, that's a third of what we did last cycle, and I think that's pretty realistic. So these targets are not that crazy. I mean, obviously, once we get to these targets, people will be calling for 250 and 500, which I do think happens at some point. I'm not so sure it happens in the short to medium term. But there is no opportunity like this, really. There are some good altcoins that look good, but in terms of asset classes that are just totally out of sync with the stock market, well, let's just say this. The stock market has been risk on for months, just relentlessly making new highs month after month, while you have, gold finally breaking out over the last couple months. And then you have Bitcoin that has just been consolidating. It's lagging. And I think that there's multiple reasons for this. Like I said, the supply overhangs that we had, but also it happens to align perfectly with global liquidity that is going to be increasing. It has been increasing. You have China that is just printing, trillions of dollars at this point, or at least flirting the idea. They have printed, I think, around $1 trillion over the last several weeks, saying that, look, we're going to do whatever it takes to get us out of this economic rut that we're in. Well, what does that mean? That means global liquidity will rise. And that's good for Bitcoin. Okay, that's good for risk assets in general, and global M2 and so many different factors related to liquidity all look promising going into the end of the year. So nothing but bullish, really, outlook here for Bitcoin, with the exception of, and I want to mention this because you probably will see a sell-off before the election, and the reason I say that is typically the stock market sees about a 4 to 5% correction going into the election. Why? Because, especially this election where people are uneasy about if it's going to be contested or whatever. Maybe there's some funny business going on. So I do expect for Bitcoin to be a little bit dicey, maybe a little volatile the closer we get to the election. But I do not see this really giving much to the downside. I mean, it's just too obvious. There's too much liquidity. The macro is beautiful. Specifically for assets like gold and Bitcoin, and it's sitting here. It's been consolidating all-time high for 7 months. I mean, it's going to be very difficult for this to go much lower, in my opinion. So I would talk about altcoins. I don't want to talk about them until after the election. I'm pretty conservative right now, thinking that, look, Bitcoin doesn't really care that much about the election because it has pipelines that's already built into traditional finance. They're playing ball. Like, they're going to be buying Bitcoin. It's a very popular asset already. Whether Kamala is president or Trump, it's not going to really matter that much for Bitcoin. I think it could slow it down. Okay. but I think it's going to do well either way. Now, crypto, totally different story. The rest of crypto, it's make it or break it, really. I hate to say that, but I mean, being realistic, that most of crypto really relies on deregulation and making it easy to build these products and these companies. And they've been going overseas for the last few years. So if Kamala wins, I think that it will slow down the overall crypto market, but I think Bitcoin will be just fine. I think that's all I'm going to cover today. If you have any questions, you would like to, hang out with us in the Discord, that would be great. And until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this, and let us know in the comments, what do you think about today's video and DeFiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next DeFiancy Insight video. Bye for now.